All right. Hey there. Good morning, everybody. Christopher Inks with Texas West Capital. It is just a few minutes after 11 a.m. Central Standard Time here on Friday the 18th. Yeah, it's the 18th of June, 2021. In beautiful but overcast, once again, Bernie, Texas. Y'all aren't going to believe that we have sun out here at the rate I've been going, right? But we do. We do have sun out here. It does happen. We just have a little bit more rain lately. And again, we can't complain about that. Definitely need that rain down here. Been in the drought for so long. But anyway, good to see y'all checking in here. As always, hey, listen, you can join us at howtotradetowin.com. And if you are not joining right now, if you've been thinking about it and you're not, it's just crazy. Use this coupon code. Let's see here. Hey, I'm going to write this in here for you guys. You can get an annual Tier 3 subscription for 50% off of the already reduced annual rate. So normally you're going to pay $199 a month if you're paying monthly. You get a discount off that if you're paying yearly. And we're going to give you 50% more off that. And that comes out to almost 70% off, guys. It's a stupid low price. I don't know how long we're going to do it. We've been doing it for a little bit here. I'm not sure how long we're going to do it. As long as interest keeps showing up, I guess we'll keep it going for now. If we get enough people jumping in and doing it, it may be something that we can keep indefinitely. So, but it all just depends. Either way, you should jump in it, man. Holy crud, man, the amount of content we've got. I know it says 80 plus hours right there, but at this point, I believe we've got around 100 hours of educational content right now there for Tier 3. We've got about 11 hours or so for Tier 2, but then Tier 3 has all your weekly streams. By the way, guess what, guys? So we do a weekly Tier 3 stream on Wednesdays at 4 p.m. Central Standard Time for tips, tricks, and techniques. And then we do a weekly Elliott Wave live stream for Tier 3 on Thursdays at 3 p.m. Central Standard Time. And finally, everything's been going great with our streaming for our members here the last few weeks. So we can go ahead and start Wyckoff on Mondays. We're going to do every Monday at 3 p.m. Central Standard Time. We're going to have a Wyckoff session. And so these are all meant to kind of bridge theory into actual application of Elliott Wave and of Wyckoff. And then the tips, tricks, and techniques just tells you all the other stuff. Patterns, last few weeks we've been talking about patterns, price action patterns, and candlestick patterns, and how to identify them properly. And more than just how they look, I go into explanation of why the price action creates this pattern or this candlestick, what's going on between demand and supply in there. Because at the end of the day, guys, we talk about Elliott Wave a lot, but those of y'all that have been following me know that I'm a price action and volume trader at the end of the day. Elliott Wave does a great job of giving, identifying the trend, giving potential targets, but at the end of the day, it's all about that price action and volume. So anyway, man, jump in there while you guys have the chance. If not, again, if we're done with it, you go, oh man, I meant to do it, but I forgot or something happened. I'm sorry. It's just the deal is just too significant, too great to kind of just let you in after it's been done. So we'd love to have you there. Anyway, hey man, dollar really jumping up today, right? Or not today, like for the last week. If you've been following me on Twitter, I've been posting all my USD CAD trades. And of course, in Discord, they've got the targets that we're looking at overall. I'm trading within those targets. But man, I just closed out this morning's USD CAD that I went long for a few hours. 75 pips profit, plus another like over 300 since last Friday. You guys can go check all the trades there on my Twitter feed. Absolutely fantastic week of trading. And so, man, it's just been a great week, guys. Hope you guys have had a great week. Let me see who's here. Let me see. Oscar, what's up, buddy? Bill's here. Man, I've known Bill for a few years now. Still checks in with us over there in the UK. Always great to see you, buddy. White R21, what's up, man? Aram is here. What's going on? He says, dollar is flexing amid inflation news. Weird. It's all about that, it's all about that dollar, I say dollar shortage. It's really a cash collateral type imbalance that's going on. You can note this with the repo, the Fed's reverse repo they did here recently. It just keeps skyrocketing to ridiculous levels. If you don't know, a reverse repo is when the Fed is taking in dollars. So basically your excuse me. So you've got like financial institutions and whatnot that they've got a lot of liquidity, and they're putting that in. They're basically giving that back to the Fed, and in return they're getting Treasury as collateral. You know, we've talked about previously how the Fed was taking all these treasuries off the market. Well, and now everybody's kind of putting their cash in there and getting, secured by those treasuries. And man, the Fed's just in a real bad position right now. You know, they've got their whole, money markets. The yields are really low. I guess it's probably negative in some areas. And then you've got those again the. What am I trying to think here? Brain is completely off. Oh man. Okay, I'm gonna have to stop for a minute. It'll hit me in a minute what I was gonna say there. Sorry, I'm excited. It's been a great week, man. Dollar is just really ripping up right now. But anyway, we'll talk about that a little bit more in a minute here, as soon as it comes back to me, what I was trying to say. But yeah, there's a good explanation in all that, with everything that's going on. Hey there, Hank. What's up, man? Good to see you. Man, got some good conversation going on already here, huh? Claudio, what's up, man? Checking in for Romania. I love it. Block Tech, man. Block Tech's been following us forever as well. Good to see you there. Let me see. Oscar, you're thinking Bitcoin going down to 30, 31? Yeah, we'll take a look, man. We'll take a look at what the charts are saying here and what, maybe going on there. Right now, I'm looking at that 78.6 retracement level right now. It's just now dipping underneath the 1 and 4 hour pivot. So we'll take a look at that, what's going on there. Excuse me. Data, what's up, man? Evolution's here. Mike, what's up, buddy? Hey, you changed your profile picture there, it looks like. Lamb? Spiral Architect, hey there. Crypto Critical, what's up, man? Excuse me. Jeez, oh whiz. I need to clear my throat, guys. I'm sorry. Give me just one more minute here. See if that works to clear it out a little bit there. Professor, what's up, man? Bill says Tier 3 membership is a bargain without the discount, but with the discount, it really is an absolute no-brainer. Buy the whole year. Forget about it. Great investment and exponential ROI. You know, guys, at the end of the day, you're going to have everybody else out there that's telling you to buy from them because they're going to tell you where to buy and sell. And those don't usually work out too well. We tell you know what? Come join us and learn how to actually trade so you don't have to listen to all that. Now, we give you setups. We do chart requests and everything. And we've got a pretty good track record on that. It's still, we're not going to know what's going on all the time. We're going to make bad trades in there. But that's why, again, being with us, you learn the importance of risk management and what's going on there. Because at the end of the day, if you want to be a trader that's going to be a trader for any length of time, you have to, first of all, understand the importance of proper risk management and then utilize it consistently at all times. That's where you make your money, all right? And then you got to understand what validation and invalidation levels are and how to appropriately identify them. Man, no matter how you want to trade, whether it's Elliott Wave, Wyckoff, supply and demand structures like iDROM, pivots, VPVR, volume, all this stuff. You can learn it with what we do, and we'll show you how to properly identify those areas, all right? So, listen, man, I can't sit here and tell you enough about it. I'm excited with what we do. We have a lot of fun, I think. Our members tend to stay with us for, well over a year. So that should tell you something right there. Anyway, let me see here. Alex checking in from Brisbane, Australia. Hey, you guys got COVID laws changing a little bit over there or whatever's going on, right? Because you guys were, I think, under some pretty hard restrictions over there. And then I think I saw something about them changing those up a bit. And speaking of that, the UK, man, you guys, or the Netherlands, actually. Is it the Netherlands? We're under some pretty harsh COVID restrictions. No, I think it was the UK. And then they were supposed to be lifted like in June, and then Boris is like extending it a month or something like that. Man, I feel for you guys, man. I really do. It's tough, man. It's tough to deal with that for sure. Let me see here. Michael Otis, what's up, man? DXY neckline in play. Touch and rejection could set up for a weekly bear div. We'll see, man. We'll see. You know, my initial thought is this strong move we've had up recently is indicative of a wave 3. So is that a wave 3 of, you know, as an interior of some larger bearish play? Or is it, excuse me, the wave 3 off the bottom? That's what we're going to look at here maybe today. Not maybe, definitely at some point here as well. Diego, what's going on, man? It says, working on my risk management right now, not jumping into Bitcoin at the time, struggling, I must say. Yeah, you know, and here's the thing. You know, again, we've got a section of videos that is specifically geared to risk management. And the biggest problem people have is not in applying it. It's pretty easy to apply. We teach you how to back into a trade so you have the right position size, even if you're using leverage, and that gives you the right stop losses and risk management, right? But the most difficult thing for most traders is looking at that and going, oh, but I'm not going to make, you know, $10,000 overnight or something. Because most of y'all are, you know, using much smaller accounts. And guys, that's the reality of it. I know you came in because you saw these great big moves and you're like, oh my gosh, I could be a part of that, right? You only see where this person does well or that person does well. Guys, where these people are making these huge bits of profit, first of all, most of them are lucky. There are some good traders out there, but most of them are lucky. And you don't see all the ones that didn't do it, all the ones that lost money on the trades. And so psychologically, it really invokes that emotion. Because you only seen these great trades, you go, oh my God, man, if I put my $100 or my $1,000 in here, man, then I've got 100,000 or something like that, right? And it's hard to deal with that. It's hard to let go of those pie in the sky dreams, this luck, and settle down and be a real trader with a small account. You can do it. It's just going to take a bit. But as I always say, guys, you know what? If it takes you 3 years, 5 years, 10 years to get where you want to get wealth-wise, so what? What are you doing in those next 3, 5, 10 years anyway? You're working anyway. The question is, do you want to work and then continue working like you're working for the rest of your life? Or do you want to work, you know, do it properly, however long it's going to take to get there, and be building that wealth along the way so that you don't have to continue working like you're working? I mean, that's really what it comes down to, but it's a lot easier for me to say than it is for, you know, most traders to accept. Again, you know, I remember, you know, 25 years ago when I started. But if you do make that decision and you do work on the process, your profits are going to come. Your wealth is going to increase over time. It's going to take you some time to get there. But if you work on the system rather than each individual trade, you know, everybody, most of y'all are looking at each trade individually. You're like, this trade, and then you're like, oh, this trade. Instead of looking at your system. And that's why you end up losing a lot of money as well. So, yeah, just some thoughts there, all right? Let me see here. What's going on, Albert? Yeah, I think you're talking about the COVID being tough on the wallets there. Yeah, maybe. I think that's what you're talking about, right? CS, what's going on, man? Good to see you. Lewis Wimthorpe, here's here as well. He says Boris is like a mini-me of Trump. I can laugh because I don't like any of y'all's politicians. And by y'all's, I mean everybody's. I mean all y'all here in the U.S., all y'all over there in the U.K. I've got a love-hate relationship with politics and power. I love to hate it. So anyway, let me see here. So anyway, guys, hey, listen, join us at howtotradetowin.com. Use that 50% off tier 3. If you have any issues with it at all, you can join us here. Let me go ahead and pull this up here. You can join the free side of our, let me see if I can get over here. There we go. Of our Discord server here. Oh, where's the copy? There it is. You can join the free side of our server over here, and then you can DM me if you have any issues. And man, I'll help you out with that, all right? No worries about that. We'll get you taken care of. We'll get you set up. I don't want anybody to miss out on the opportunity for this crazy, basically 70% off your average, your usual month-to-month rate of tier 3, if you want to get in there and get it. All right? So let's go ahead and jump over here, guys. Well, you know what? Let me do this. Let me start with the DXY first, okay? Because the DXY is what's been the talk of the town this week, right? The dollar has been the talk of the town. And not just this week, but last week. If you guys were following me, you know last Friday I made a trade for, I don't even know, was it 63 pips or something like that? That was the start of this week-long trading, longing USD CAD. By the way, there's something for you guys to understand. Trade, especially if you're a newer trader, trade in the direction of the trend. Whatever time frame you're trading on, the direction of that local trend, trade in that direction. You don't have to trade against it. You're going to, because, price can, remember, we always talk about corrections, right? And so when you talk about Elliott Wave, you have you have those motive waves. You have 1, 3, and 5, right? Those are the easy ones to trade. You get in, you ride it. Waves 2 and 4 are corrective, and corrections can come in so many flavors and styles and sizes and whatnot that most traders are okay getting in on these longs, but then they lose everything they made or most of it in the correction area. And instead, you should just go, you know what, especially if you're a newer trader, just ride the long up. And when it goes into a correction, just wait until you get confirmation to ride the next long up. Now, I'm not going to go into the whole thing about what these confirmations are and whatnot right now, because depending on how you trade, there's different levels of confirmation or different areas of confirmation based on that style of trading. But the big takeaway here is you trade in the direction of the trend. That's all I did this last. I could have made a lot more money if I had shorted as well along the way. But I just traded in the long way on this USD CAD here. Look at this. Let me show you out here, guys. Look at this craziness. This is this week here. Let me see. What's today? The 18th? So all the way through the 11th. So right from about this area here. Look at this. This is huge. It's a ton of upward movement there. And you'll notice here, look at how it's come up. I mean, look how beautiful this bottom is here. Now, guess what? We pop this on here. There we go. We have got what looks to be accumulation down here based on the price action and the volume. And I've talked to you often about accumulation usually has this decline in volume, right? Look at how we've got volume declining throughout it. Because you're pulling more and more off the shelf, right? And then on the breakout here, it takes off and it goes up with your volume there, right? So everything else aside, I mean, this doesn't guarantee that the bottom is in. I've got a count here that says it maybe is. But if I'm looking at this right here, this big movement tells me this is likely a wave 3 in here. That's what that tells me. And that's with the the larger volume here, as well as the large candle spreads coming up, which means we get a pullback for a 4, and then we'll have a 5 potentially heading higher there. And overall, I think that may take us up here to this wave 4 resistance area right here, wave parentheses 4 on the 4 hour. It's also this supply structure, this wick up here. So I think it might take us into that lower end there. We'll have to see how this continues to play out here. There's been a lot of restarts and in your counts and whatnot going into all this. But this has been great trades here all week long. And all I did was trade some longs all along the way. And I didn't even get the full effect of some of them. I had targets, set with Discord. But I like to manage my trades as I'm doing them. I don't really like to, I'm just old school, man. I've been doing it for so long, and I don't like to really just set it out there and let it be. So, at the end of the day, I close out. I don't like to normally, well, it depends on where I enter. Again, we had the trade at the end of last week that I let set overnight, and then the one at the beginning of this week that I let set overnight. But it's because I got in at an area that was very low down here, where I knew, where I had confidence of where my, where I wouldn't have to come too far back to get out of the position, right? So my stop loss wouldn't have to have me lose too much money. And then we had all this going on here, and these big moves up make those pullbacks a little bit more questionable. So, I just manage it while I'm in there, and then I close it out. One time I closed it out for, I think, if you've been following me on Twitter here, you'll find the thread there. But I think I closed out for about 10 pips or something. And then overnight it went up another 50 or 60 to my target. But, again, it's okay. And the other thing I want you to learn from this is you don't have to get every trade or to get every trade perfectly. That's, hopefully you're, if you're following me and looking at my trades there and how I did all that, hopefully that you understand that. Because a lot of the issues you're going to find as traders are self-imposed issues. These are things that you've caused yourself because you're over-emotional, or you're bored, or you're scared of missing out. And so, you put yourself in bad situations and you try to hold on longer than you should instead of taking profits, and then you lose a whole lot of it or all of it. Because once it comes back against you, all you can think about is, man, I could have had this profit. And then you think, man, if it just bounces here and pushes back up, I'll get out. I swear I'll get out. Tell me that isn't what you think. That is what you think. I know. Again, I've been there. I've talked to so many traders over the years. I know. So a lot of what goes on, everybody wants to teach you all this technical stuff. But trading, this technical stuff, it's just the stuff on top. It's the layer on top. The real trading is the psychological part of it. Because all the market is emotion. That's all it is. The technical stuff just helps you regulate and or figure out where that emotion may be taking price. But really, the market is just emotion, guys. This movement between fear and greed from those extremes in the aggregate, the market itself is made up of all these traders and whatnot. That's all it is, guys. As a professional trader, all I'm doing is managing my expectations based on what the crowd is thinking or doing. And understanding where they're becoming overly emotional and whatnot. And that's what it becomes. So, yeah. Jared the Great, what's up, buddy? You said joined Tier 3 last week and it's absolutely worth every penny. Man, thank you for saying so, man. Again, I can sit up here and tell you guys all day that it's worth doing. But I know that it's nervous. It's a little bit of money. It's nervous to put in that money. But I'm going to tell you what, guys, I'm a pretty stand-up guy. And, I probably put in more hours than I should. But I bend over backwards to help our members, to become better traders. And for some new members, it's getting over the idea that somebody's going to tell you where to buy and sell. I can't tell you based on your personal circumstance what you need to do because it's against the law. I don't have an RIA license. Not yet. I keep saying I'm going to get it. I've got to get around to doing it. But right now I don't. So I can't give you personalized financial advice, which is what that is. Now I can look at the charts and tell you what I'm thinking about the charts and where price is potentially headed and what levels to look for. I can do that because that's in general. And so that's a little bit sometimes for a new member to kind of get to move beyond. But what we found is pretty much all of our members do that. They make that move. And they sit back and they take a deep breath and they go, okay, I can do this. And they get to learning. And there's a lot of educational stuff in there, guys. So anyway, I'd love to have you there. Our members are absolutely fantastic, guys. I'm telling you what. And I think it's because, we do our job that we do so well. And that makes them stick around longer. And then you have this community that's really, you don't have people joining every month and leaving. You have some that do, but most of the people stick around for the long haul. Again, guys, we've got members that have been there since day one, back in almost 4 years ago now? September 11th, around that, September 9th or 11th of, I think it was September 9th of 2017 when we started. So I think that's got to say something for it, man. Let me see here. MK, what's up, man? Good to see you checking in. Clarence, hello there. Brian, what's up, buddy? Let me see here. Mike, talk to me in DMs. Let me know what you're talking about there. I'm sure I probably fixed whatever was going on, but remind me in DM over there on the server, and I'll check it after we get done here. Let's see here. Jay can play. What's up? He says, does so much more than even last spring when they joined. Okay. I thought you had a question there. Yeah. Always trying to add more. You guys know if you've been sticking around, we're always adding more, especially to Tier 3. So, yeah. MK says Tier 3 is gold standard. Man, you guys are going to make me blush here. Seriously. I really appreciate the kind words because we work really hard at it. So, yeah, good stuff here. Okay, so what were we talking about? Well, we're talking about what's going on here. The dollar's taking this huge move up, right? And so what is that doing? It's like kicking everything else, right? So Bitcoin isn't really, I wouldn't say it's necessarily taking a huge hit. It's having trouble. It's struggling a bit to deal with the dollar and what's going on there. But I explained to you before that especially when the dollar does these large movements, it has a pretty strong reactionary effect on things that are denominated in dollars. Silver, gold, the USD pairs in the FX market. Like you see here, this. I was pointing at this. This is the USD CAD, but, this right here, when the dollar's doing this here, is what we're talking about. And so, you should expect, if the dollar's really rearing up like this, you're going to expect to see things pulling back and taking a hit. And I've noticed it's caught a lot of people off surprise this week because people are generally emotional. They're emotional about this idea that the Fed is printing all this money and hyperinflation is coming. And then when you add on to that, especially in crypto Twitter, you've got this whole, not a real understanding of Bitcoin as a player in the global financial system. And so, more of what they wish Bitcoin will become or what they hope it to become. And so when you put all that together, it gives this really bullish Bitcoin view, very negative, very bearish USD view, dollar view, which then ends up rearing its head like this and just totally wiping people out because they weren't expecting it. They're like, how could this even be happening? Who was it there at the beginning there was talking about it? Aram, yeah, you were like, man, look, inflation's way up there and dollar's going up. What the heck's going on? But as I've explained before, the global financial system is very intricate. And even the way, just locally, just the way that the U.S. Fed works is very intricate. So the Fed prints dollars, right? And what that does is a lot of it goes into the vault, which can't be touched legally. And those are reserves that banks can reference when they're making out loans, okay? Because the real dollar creation you're thinking about comes when banks make new loans. So what does that mean? That means when people are paying off loans, they're taking dollars that were created and put in the system and putting them back. So you're taking dollars out of the system. And we know we've had a lot of payoffs here over the last year with credit. The banks are making credit more difficult to get. We've talked about that over the last year. And that slows down, the dollar creation. But then you look at the money and then you go, okay, well, Chris, so fine, but why are assets going up, right? Why are commodities flying? Why is the stock market going up? And so, especially in terms of the stock market, that has a lot to do with how the rest of those dollars that the Fed is printing leaves the Fed, right? And so basically it goes to primary dealers, and this all becomes basically a ledger thing, just a movement of numbers around on the page. Goes to primary dealers, and then there's U.S. Treasuries that are exchanged for dollars, and then, and so it just becomes just this ledger thing, just this balance sheet. And Travis, man, overall, Travis did a great job here, guys. If you're not following, let me kind of put this up here. Let me see if I can find him here real quick. This is definitely a follow that you guys should be doing if you are not yet. And if you're very anti-dollar, very pro Bitcoin, and you can't get out of that in your head, you're gonna hate this page. But this guy here is the president of Real Vision. Raul brought him in last year, I believe, sometime. But he did this great thing here. So here's a great thread right here. Let me see here. And he talks, so just come on to it's Colorado Travis is his Twitter. Get on there, check out this. This is a great thread here, and this was a great thread here about deflation and kind of explaining to you, I think this is the thread that explains to you that deflation and inflation aren't opposites. It's not like high and low are opposites, right? The deflation and inflation are two separate things. So when you go, oh my gosh, how can we have all this inflation and then the dollar run up? Well, here's a good entry to it, guys. But there is so much more going on in the system than you guys really realize because you don't understand how it's working. You just kind of parrot these little quick little sound bites, and people feel really good about doing that. And unfortunately, it may make other people who don't have any clue what's going on think that you're silly and you're great and all this. But the rest of us kind of look at it and go, man, and you're trading? This complete misunderstanding of what's going on is going to lose you money over the long term. But, at the end of the day, guys, with whatever you're doing in life, the goal should be to understand the opposite of what you believe. You should always be open to a thought that is different than yours, because you will never know the truth. You will never know the truth if you can't entertain some arguments against what you believe. If somebody says something opposite of what you think, especially if you don't know what you're talking about. And I'll tell you what, if you don't have a macroeconomics background, or if you don't have, some of this other kind of higher education stuff going on, man, you don't know what you're talking about. Most people don't still, even when it comes to how the whole Fed thing works and how it potentially affects interest rates and what's going on with the dollar and all that. So you should definitely be open to people that have that thought, that have that better education that you do in that subject matter. Otherwise, it's just a freaking echo chamber, guys. And if all you're interested in the echo chamber, you're going to get you're going to reap what you sow. And if you're trading, the goal shouldn't be to be right more than to be profitable. Yes, we all want to be right. And we hope we're right, because then that leads to profitability, right? But you shouldn't be desiring to be so correct, so right, that you ignore profitability. And that's what most traders do. They'll get in there and they'll hold steadfast to their opinion or their thought of what they think price is going to do, even as it goes well beyond any stop loss they should have. They'll just keep holding. They'll say, man, it's going to do what I think it's going to do. It's going to do it. And this is not even gambling. This is just throwing money away, guys. Trading is a skill set. Just because you can get into a market, cryptocurrencies or whatnot, doesn't mean that you have the ability to trade successfully. But if you're in the market or thinking of getting in it, you should want to learn about it as much as possible so you can be effective. Remember, 90+% of new traders are out in the first 90 days broke. There is a reason for that. They never get over the thoughts of what's going on. They come in, they think they know what they're doing. They can't be bothered with being humble and suggesting maybe, and listening to somebody who might know what they're doing. And on top of that, they look for somebody else to tell them where to enter and exit. And those things are just going to get you lost, guys. It's going to lose money, okay? So I hope this is making sense. If this is your first time viewing, what I do here, this is it. This is a lot of it. It's that psychological side of it. Because this technical stuff, okay, maybe I can't teach a monkey. But, you could basically teach just about anybody to do this with relative ease. But even knowing how to do this, if you can't get over the understanding of admitting that you don't know what you don't know, of being humble, of always looking for more and more information and learning more about it. If you can't do that, if you can't get over being emotional, it doesn't matter that you know that wave 3 is supposed to go to 1618. You're not going to let it get there. Or it's going to get there and you're going to think, it's got to go higher. And then it's going to pull back. And then when it gets to the bottom of wave 4, even though it can be 38.2 or 50, you're still going to sell at the bottom there. And then it's going to go up without you higher like you thought it was going to do originally. Because, we're human beings, man. That's emotion. So a lot of what you need to do to become a better trader is really understanding yourself. And most people can't be bothered to do that. Let me see here. Let me see here. What's going on here? Mark, what's up, buddy? Well, Zobia Dollars. Hey there, bud. Good to see you checking in. Data says would be worth a try to see how a monkey would do once he figured out how he gets food for every positive trade. Yeah, there you go, right? So anyway, so here we are, okay? What's going on with Bitcoin? Well, again, right now, at the end of the day, the reality of it is we are only 3 waves up, okay? Now, there's the possibility this could be a 1, 2, 3, 4, 5 of a leading diagonal. But again, as I always say, your diagonals are usually a last thought. So before I want to agree on that, I'm going to look at this potentially being a 1, 2, 1, 2 here. Okay? Now, here's the thing. Let me kind of turn off my volume here so you guys don't hear all those funny sounds. All right, there we go. on the computer there. Now, here's the thing. Because it's only an ABC, this keeps a possibility of this being an A, this being a B, this being a C as a triangle still. And then we would look for an ABC down for D, and then an ABC up for an E. And then it would come down lower, okay? However, if we get the breakout and we go above this swing high here, again, that says we either have a 1, 2, 3, 4, 5 as a leading diagonal, or we've got a 1, 2, 1, 2, 3 of 1, 2, 3 heading up. And if it's a 1, 2, 1, 2 here, then 3 is going to be a nice, big, strong move, kind of like this. I would believe it. It'd probably be something like similar to that anyway. Because what you have here is all this consolidation since a month ago now. This is all consolidation here over the last month. Now, if I look at this structure here, what I notice is overall volumes dropped off until we get to this point here, and then we see volume expanding as we've been rising. So if I'm to look at this, to me, it looks like selling climax, automatic rally, and then you've got your local spring in here. I say local spring. It's just because it doesn't go down below the bottom of the trading range here. It goes below this swing low here. So to me, this potentially says automatic rally, ST in phase B. Well, not ST in phase B's, but a secondary test down here. And then move up here, and this gets you a lower low, which gives you a lower low, or a lower high, which gives you a lower low here. So this is your spring over this low here. So this should be phase C here. And this interior markup is phase E. And then this should be setting up for, this phase E here. And this should be setting up for a move breakout there, which would be phase D, your breakout above here, and your show of strength. All right, that's what I'm kind of looking at the moment here in terms of this. Unless we cannot get above wave A. We have to get above wave A. I've been talking about it a while now, right? So there's 42,599 and some change here on Kraken. We got to get above that. If you get above that, again, you no longer have a possibility of a triangle here. And now you have bullish market structure off this low here. You have a low, you'll have a high, you'll have a higher low, and then you'll have a higher high. So locally, again, looking at this as a 1, 2, 1, 2. And with this right now, you can see we're just right here around the 70.5. That's a very significant level. It used to be that 61.8 was the big deal, with Elliott Wave. Institutions have come in, 70.5 becomes a big deal. So you notice that 70.5 is basically right there at the 1 hour and 4 hour pivot as well. So we've got 1, 2, 3, 4, 5. That looks like A. And we've got a B. And then we've got 1, 2, 3, 4. And then we've got maybe a 1, 2, 3, 4, 5 here. As an ending diagonal maybe. Fifth wave of wave C. Now, it's possible that price could continue lower here to the 78.6. As you see, you've got a lot of support and resistance, support and resistance in that area there. It's a good area. It's a good flip area. But what you're looking for, if you want to be safe on an entry, or safer anyway, if you want to look for a higher confidence entry, you want to buy the breakout of this descending channel resistance. Because price can dip below here, get a throw under, and then rally right back up. So the throw under becomes a bear trap, rally right back on up. So if it comes up and it hits the channel EQ, that gives you a target of the channel resistance. You break out of the channel resistance. Then based on the height of the channel, you have a target of $1,973 above the point of breakout. That's your first clue the bottom's probably in, is breaking out of that channel there. If you continue to break out here above wave B, which on Kraken is 39,546 and 20 cents. If you break out above that, that's going to add a lot of confidence to your count. All right? And so you should be looking for price to take out the top here, which again, if it does, two possibilities. I've got a 1, 2, 1, 2 right now until it proves otherwise, or potentially a 1, 2, 3, 4, and a 5. Gives you a leading diagonal. Either way, you've got 5 waves up from the bottom. And that should tell you that the bottom is likely in, and then of course you want to take out that wave A swing high there. So if this is the bottom here, then we're looking at this wave parentheses 3 target up here around, up there around 50,900. Up in that area would be where I'd be looking for. That takes you above the interior wave 4, the exterior wave 4 and the interior wave 4. Again, marks that you use along the way to suggest that you're getting better, that your trade, your confidence should be higher in your count. All right? If we're getting out above wave A here, I think there's little reason to think that this is not the bottom. But, of course, you still need higher up there overall. But you've got a great move there. So we'll see what goes on. The only time you get, I think, nervous about upside is if we're dropping below wave 2 here. Okay? So this is 34,680. If you drop them below that, then we've only got 3 waves up, and it starts looking like the triangle. A, B, C. You'll get D, 3 down, and then you'll get E, 3 up, and then break down. But even in that case, it just becomes a wave 4 breaking down to a wave 5 into the 20s, and then you'll get that turn back up for at least 3 waves back up, probably toward minimally this 40,000 area at least. All right? Common Man, what's going on? He says, thoughts on PLTR. The 25 area looks critical. Hoping to break above. I'm long because I like the company, but feedback is always good. Let's see here. Let me find a chart here. PLTR. I don't know that I've actually done a PLTR chart. Oh, look at that. I did. Maybe that's why you're asking about it, right? Let me see here. So this was my thought back here in May. Let me see here. Man, this is you're up here and overbought. Haven't quite hit overbought here on your daily. I've got I've got 5 down here for A. You know what? It's possible. You know what? B, C, D, E. Yep. All right. I think what happened here is I think we've got a triangle for B, and that's why it didn't get down to the target. So this should get you, instead of 2, that'll get you wave B. And then you have your wave C right here just above the 61A, which is this cluster right here. Matter of fact, where it comes down there, look at that right there. Let me kind of draw that on there. That support is right here at resistance. You see that? So I think that was probably 2 there. Looks like you got a 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, 5, 3, 4. Can pull this out here a little bit. Yeah, it looks like we've probably got a bit more upside. It may turn here at the R1, but if not, I would look probably at the triangle resistance up here, the top of the triangle resistance around 27.46. And if it continues up to there, I'd look for the R2. But in this area is probably going to be the top. I think we've got like a 1, 2, 3, 4, working on a 5 here. Let me see here, that pullback then. Let me see here. Yeah, if we at least get to that red area, that gives us a 50% pullback at the daily pivot. And, we should bounce at that daily pivot or above. We should stay above that. I mean, it could just dip right through and then right back up. But, again, see how you have this resistance right here? And then it pops up, puts some more resistance right here on the support area, comes back down, finds support on this resistance. And now we've taken off. So we should get a breakdown right toward this area here. Maybe give us a week 2 and then a 3 up after that. So I think overall, I think your long is looking pretty decent at the moment. The only thing you have to worry about is if price drops back below $17.06. If you get below that, then the count is invalidated. But it does make a really strong argument. Yeah. That this wave 2 is done right around the 61A retracement. Wave B was a triangle. A, B, C, D, E. Thrust down for C. 2 completes. Then moving up. So yeah, I think it's looking all right at the moment there. Cheese spread, what's up, man? Everybody likes cheese, right? LXT, what's up, buddy? Fiat is here as well. Let me see here. Let me just kind of catch up what you guys were talking about here when I was talking. Do we know if any of these waves are primary, minor, major, etc.? What are you talking about on, you have to tell me which chart. I'm just catching up to your comment there, MK. Let me know which chart you're talking about there. I agree a lot with Hank here. He says most small-time crypto traders are really just investors trying to find a way to double or, well, I would say probably 10 times, right? If we're honest with each other, right? Trying to 10 times our investment. He says, if that's you, say goodbye to your money, guaranteed. You know, I don't guarantee anything, but there's a strong likelihood that you'll probably lose your money if that's the way you guys are coming in on it. Just what we were talking about earlier. You know, either you're in it here to try to get rich overnight, or you're in it here to develop a system that works for you. If it's the former, you're going to lose your money. If it's the latter, you've got a really great chance of being successful and being able to remain a trader for a very long time. It took me, about 4 years or so to get that figured out. I wasn't consistently profitable until 4 or 5 years after I started, so 95, so that makes it 99, 2000, right before the dot-com bubble crash. Yeah, that's when I started getting consistently profitable. And you go, oh my gosh, 5 years, 4 years, holy jeez, I don't have that much time. Well, that's part of the problem. That's what I would think at first as well. And that is the problem that, you know, gets you to losing money, unfortunately. It was hard times. It was hard to lose as much as I did over that time. A lot of money and a lot of frustration for it. Even more than the money lost was the frustration of losing it. And I finally, you know, again, you guys know my story. I finally decided one day to, you know, listen, I'm tired of losing all this money. I want to figure out absolutely everything I can about the markets and how they're moving and why they're moving and how they're doing the things they're doing. And that was my road to getting profitable. But this is also the reason why, again, I've said before, why I'm doing this huge discount right now for the annual tier 3. Because if you're just coming in for 1 month and then you leave, you're going to learn stuff, but you're not immersed in it enough of being reminded of those things you have to be reminded about to be successful over time. You know, it takes time, guys. It takes constant reminders of the things that you will forget at first. It's easy to say, oh yeah, I'm not going to be you know, emotional anymore. It's a lot more difficult to actually do that. So yeah, that's why I do that. Just so you guys know. Let me kind of catch up to you guys here. Mike says, there is hope for me. I'm entering my 4th year. This is my time. Yeah, you know, it really is. It's just paying attention and doing it. Now, you know, the other thing we talk about, guys, in terms of trading is often new traders will come in. And I say new traders, and they'll be like, oh, no, I've been trading for 3 years or 2 years. And I'm not a new trader. I'm a veteran. And I say, oh, yeah, well, have you been consistently profitable? Well, no. Are you constantly adding new money to the market? Yes. Then you're still a new trader. You haven't practiced the things you need to practice to get you where you want to be. It's like anything else you do, guys. If you played sports, if you played musical instruments, anything that you have learned to do, any hobby, any skill that you have learned over the years that you have become good at, it took time and practice. If you play video games, it takes time and practice to get good at it, right? To be able to beat a level, right? It is no different with trading. But people think because they can get into trading, especially crypto, with just $50, $100, or they think, oh, they know what they need to know to get in. They can do it. Well, yes, you can do it. Not when you first come in like that, though. You're going to lose your money. The goal is not to lose that money. The goal is to stay liquid while you're learning, so that way when it starts clicking in and starts becoming more and more consistent, you've got money to go. Otherwise, if you're losing money along the way, you're going to be out complaining, oh, they stole my money, Wall Street tricked me, Wall Street scammed me, the whales scammed me. It's always the whale's fault, right? But you don't want to be that person. I keep telling you, the way you approach life is the way you will ultimately end up approaching trading. And if in life, if you are a victim in life, if you tell yourself constantly it's somebody else's fault, if you constantly do not realistically take responsibility for your part in something that's happened to you. You will forever blame everybody else, and that is detrimental to your capital, to your wealth in trading, because you don't learn from the mistakes you're making. You argue that, oh, it was somebody else's fault. I never had a chance. That's BS, guys. I'm here to tell you that's BS. I know, I'm doing it fine. We've got lots of traders that have been with us that are doing great as well. We got some that are just starting to click in now. We've got others who have just begun. But they'll get there, and you can too. But you have to approach the market intelligently. All right? Let me see here. Common Man says, I was a competitive chess player. I started playing at 14. It took me 4 years of studying every day to win the Missouri High School Championship. Trading is harder than chess. Facts. There you go. Like anything else you do in this world, guys, it's going to take time and effort on your part to do that, okay? To get good at it, all right? And a lot of it, like I said, most of the problems you're going to face as a new trader are your emotions, your inability to let go, okay? Let me see here. Jason says, new retail AMC call buyers feeling pain today. Yeah. Oh, there's an even worse thing, guys. Options. If you cannot trade consistently profitable with your charts, just regular trading, you should not be looking into options. Options are completely different. There's something, options are math. Options are math. That's what they are. And it's a completely different way of trading. But everybody's jumping on it because some few people did really well, right? So everybody else is jumping in. Most of the people are losing their rear ends with trading options. It's unfortunate, but it is what it is, Let me see here. Cheese Spread, what's up? He says, the infamous quote, if I do a job in 30 minutes, it's because I spent 10 years learning how to do that in 30 minutes. Man, I love that. Absolutely. Another favorite of mine, I'm big into music. I play, instruments or whatever. I've got friends who have bands, like real good bands, right? Like they make money. They make a lot of money. People know them, right? And the funny thing about it is everybody, when they just hear about you, like, oh, you're an overnight success. And every one of them will tell you, yeah, my overnight was the last 10 years or the last 20 years of getting to where I am today, of honing my craft and my skill to get here. But, again, it's that whole way in which we look at things as human beings. And that's what I'm trying to get you guys to shift away from, is looking at that way, which is incorrect. Okay? Christian, good to see you. Mike says, yeah, everyone wins in a bull market. Pretty much. Everybody's a genius in a bull market, guys. That's the way it is. Let me see here. So anyway, yeah, so, there we are with Bitcoin. We're going to see if we can get this bottom here. We had a potential bullish divergence coming up there, but the drop down here, negated that. That's fine. We dipped into oversold. Stoke RSI dipped down here, well into oversold. We want to see a bullish cross, and then we want to see a breakout of oversold here. That should carry price up. Like I said, draw your channel on here. If you break out above the channel EQ, target the channel resistance. If you break out of there, $1,970 or so above the point of breakout is your pattern target based on the height of the channel. If you're breaking out of, which should take you then above that 39,561 area or 64 area. If you're getting above there, that should add a lot of confidence in the idea that the bottom's probably in, you're heading up. You want to break out above your swing high here because that gives you 1, 2, 3, 4, a minimum of 5 waves. Either a leading diagonal or it's a 1, 2, 1, 2. In either case, price is heading much higher overall, is not going below down here. So there's your line in the sand right now. Beyond that, you want to take out wave A up here, which is 45,000 or 40. Gosh, dog, I'll look at it here. It's 42,559.80. That'll be your next target you want to take out. If you do that, no more worrying about triangles here. At that point, you've got bullish market structure. Again, more feathers in your quill there to kind of give you more confidence in the idea that the bottom may be in. None of that guarantees it is. Price could, head up higher here, have some deeper correction going on, and then come back, right? But every time you're getting through those levels, it's getting you more and more confident that the bottom is likely in, and you can continue playing that. But whether it's in or not, all you have to do are trade the levels, trade your invalidation levels, use proper risk management and stop losses, and you'll be good to go. You will be good to go. It won't matter, whether, what the bigger trend is at the moment. Because the bigger trend overall is still this thing. Let me see if I can zoom out a bit here. The bigger trend is still this. It's still down. High, low, lower high, lower low. That's bearish market structure. But there may be a reversal here, and that's why we're looking for that breakout above wave A, because at least from this point locally, we now have a low, a high, a higher low, and then we'll have a higher high, which puts us on notice that this bearish market structure may have ended down here. But we'll need a breakout above this point up here. Remember, high, low, lower high. You're going to have to get out above this area up here, right there around 60,000 or so, to get out of that bearish market structure. All right? Let me see here. So there we go with that. You can notice this is, by the way, this is the 8-hour. Bottomed out, trying to curl back up. So even on the larger time frames, it looks like it wants to. Oh, excuse me, hiccups here. That it wants to head up. Again, the 4-hour Stoke RSI down and oversold. Again, we may see this come down to the 78.6 or something there to pull this down, the RSI down into oversold. But here's the thing right now, guys. Right now, we've got hidden bullish divergence right now. Let's see if I can get that there. There we go. So hidden bullish divergence. Let me make sure this stays on the 4-hour here. Oh, there we go. Because we have lower lows in our oscillator here after this peak. So right before the peak and then low there. And we have higher lows right here in price. So this is something to watch. Do we get this? Do we get it to follow up through? Which would make sense in the area. But like I said, it could still head down lower. This wave 2 can continue all the way down to where wave 1 starts. It just can't go below it. It cannot go below 34,680. If it drops 1 penny below that, and this is on the Kraken chart, so whatever chart you're using, this low in this area right here, if price drops just 1 penny below it, I would look at this, I would start looking at this as a likely triangle here. But until that point, it's still, again, a leading diagonal or a 1-2-1-2 playing out right now. So yeah. Did you say the Miami Big Connect conference? Oh man, it wasn't called Big Connect, was it? I hope not. Big Connect was that big Ponzi. Oh, by the way, if you guys have heard, the SEC is finally filing charges against the people who were doing the Big Connect. They finally doing it years later here. They've figured they've gathered enough evidence, and they're finally doing that there. So yeah. Let me see here. So what else do we have going on? So we've talked about the dollar. We've talked about, well, remember with the dollar, we still need to see price take out this 94.741. That area up there, all right? That's this wave circle 4. On that macro move down that I've got, where we've potentially got a bottom down here, we've got this as a 1 here with an ABC down, ABC up. So we've got this flat correction going on here. So we've got 5 down. That's that 4. We need to get above that, because once you get above that, that says that this cannot subdivide anymore on the way down, which means this is done. So that's a minimum target we really kind of need to hit. By the way, something else I've talked about is the possibility we've got an Adam and Eve double bottom going on here. So again, I talked about this, most recently last Tuesday. If this breaks out through the, through the swing high up here, then based on the height of this, we have a pattern target, a double bottom pattern target of 97.626, which just takes us right to this area right here. Always look left. Takes us right to this area. Support here, resistance, resistance, support right there, resistance, resistance. So a pretty significant area. Makes a lot of sense to target that with that there. So we'll see. So until that point, price is still subject to fall back lower. If it breaks out above this top here, it could just be, an A, B, C heading up, some bigger correction of some larger move down. But, it starts increasing the odds that the bottom may be in, especially with the possible double bottom on there to kind of cement that down there. Remember, when this was down here, if you guys were tuning in back over here, so almost a month ago, I was talking about the possibility, because we saw this overlapping going on here, right at this lows. And I said, yeah, it's pretty close to there. So until we get proof otherwise, you want to be leaning to potentially having it further down. But I said, you know what? If we get a breakout here and heads up, that would make a lot of sense, because everybody's, that would be the most pain, right? Because everybody's dollar bearish. Everybody's expecting the dollar to go down. Wave 1, they say it's a dead cat bounce. Yeah, whatever. Wave 2, they're like, oh, look, I was right. It starts nearing this breakdown here. They're adding in along the way. And then it takes off and goes the other way. Well, guess what? All of a sudden, they're underwater. They got to rush to cover, right? They got to rush to cover. They've got to add their longs in there. And all of a sudden, this becomes a great area to knock them out of position and to get some fuel to drive that price up. Now, of course, it's the DXY. You can't trade the DXY directly, but you can trade dollar futures like on the CME or the CBOE and other places. So again, that sets up this potential move up. And again, remember, we've talked about it constantly. I want to remind you all, these macro reversals often happen at the beginning of the year. This happened right here on January 7th, January 6th, beginning of the year. So, there's a lot of possibility in that. But there's no guarantee that the bottom's in and it's headed up. But right now, while it's heading up with such strength, we're going to play it in that local move up, which is what I've done over the last week with the USD CAD, long in the US dollar against the loonie. Made a ridiculous amount of money doing so. Like I said, I put it all there on Twitter, all my trades I was putting in there. So yeah, it's been a good week. But you're just trading in the direction of the local trend. I'm not looking at the daily. I'm looking at the 1 hour and 4 hour charts, and my local trend's up, and I'm just trading that direction there. But if this continues going higher here, everything else should continue to have issues. That would include Bitcoin as well. But as this finds a top of some sort, and this count may be off. I'm looking at this as a leading diagonal here, leading into a 1-2, which gives us our, we've got this long wave 3 of 3 playing out here. So, we'll see what that does for Bitcoin. But overall, if you're seeing USD strength continuing up like this, it should put a lot of downward price pressure on Bitcoin. So we'll see what's going to happen with that. Don't jump ahead of yourself and just assume it has to do this, this, or that. On-chain metrics, we're starting to find out that those on-chain metrics may not be the best way to view what's going on, right? Because if you'll remember, back here, I remember having these talks with people on here and Twitter and everywhere else. All this area here, we kept seeing everybody go, look at all this Bitcoin that's being taken off the market. Look at all this is a huge one leaving. Look, it's all leaving Coinbase, right? Oh, look, the Bitcoin on the exchanges is at the lowest level ever. And I kept mentioning at the time, I said, this was a great metric, prior to 2018, right? It was a great metric before because people were keeping their stuff on the exchanges. But the problem is now, since that time, we've had this really strong, not your keys, not your Bitcoin, not your keys, not your crypto kind of thing. And so more and more people are holding their stuff offline or off the exchanges. And if you're an institution, you have to pull it off. You can't just leave it sitting on the exchange. You've got to get it custodied. So you have to pull it off. And I pointed out all those times where we saw supply come in really heavy, really quick. So all of a sudden, the idea that there's a low amount of Bitcoin on an exchange doesn't hold, to me, as much water as it used to. So I think we're going to see other metrics, finding that same kind of idea as well. They're going to find that they don't play out as much as they used to because things are changing, because the market's changing, the players are changing. And I warned you guys back in 2018 that when we got this next bull run, that things were going to start changing a bit because you're going to have that institutional interest. And we're seeing that happen. So, you can continue to look at it, it's fine, but just be careful making these assumptions because everybody continued along and then you got all this, right? Because of the exchanges, the amount of Bitcoin on the exchanges, dropping so much. So just be careful, guys, all right? Use it as a part of what you're doing, not as the only thing. We look like we're, I don't know, if we don't get a breakout here, this might just be a wave 4 consolidation. Again, looking for this move down here toward this 36,000 level here. High volume node, 78.6 retracement. Is where I'd look for that next target, but looking for a breakout above that descending resistance there. Now, what you can probably do here as well, and then we'll look at the stocks here in a minute, and gold and silver and all that fun stuff. Right here. You can draw you a channel right here, a wave C channel. So that comes off your wave B swing high there. And that kind of gives you an idea. That might get you an earlier entry. A breakout above it, which as you can see here, that's around the EQ area. So you get a breakout of there. You're looking at the larger channel resistance. You break out there. You got that still heading up there. All right. Let me see here. Rom, what's going on, man? I appreciate the kind words. Thank you. You're about to get T3, but before that, can you tell me at what time are the live streams done? Oh, for the tier 3? So there, you'll have to do the conversion. I'm not sure what time it is, but it's 4 p.m. Central Standard Time on Wednesdays, and then 3 p.m. Central Standard Times on Thursdays, and soon to be Mondays. But listen, it's okay if you don't get the live stream because we archive them all. So you have access to every one we've done since last summer when we started doing the live streams. And so that'll get you probably about 90 hours of stuff that you get to watch, education that you can watch. But they're always up there that, within a few hours of it completing. And so you can come watch them anytime, and then you can ask questions right there in the channel, and it's all there. So yeah, you're not going to miss out on anything if you can't make the live stream. I've tried to make it as accessible as possible to as many people as possible, which our European friends were suggesting the 3 p.m., which is why we're doing the other two at the 3 p.m. my time. But yeah, so you'll have that there as well. Yeah. Let me see here. Hank says hedge funds have sold 15,000 Bitcoins since the all-time high. More than Saylor wants to buy. Oh, yeah, Saylor, man. So Saylor, right? So he completes the 500 billion. Oh, see, 500 billion. No, 500 million. So he's going to go in with that, buy some Bitcoin. And then you remember when he did the 500 million offering, he had supposedly $1.5 billion interest, right? So that's why he's doing then. He filed the SEC paperwork to now do another $1 billion as well. We'll see. If this works out for him, he's golden. If it doesn't, and things head down for whatever reason, people are going to look at him as being very risky, and it's going to make it difficult for most people to put money toward him in the future. Remember, Saylor's company, MicroStrategy, it was one of the fly highs during the dot-com bubble. And he almost lost it entirely. His share price almost went to zero, at the end of it. And it's just kind of, compared to his competitors, he's lost market share. He hasn't had as much coming in. And I've shown you guys the chart before. And it was only after he started buying Bitcoin did the value of his company start rising. But all his competitors, for years prior, the 2014, 15, they were already taken off. And he was just going sideways till 2020. Not really doing much. So a lot of what he does is predicated upon Bitcoin actually continuing higher, 6 figures, whatnot. If it heads in the other direction, it really, from a business standpoint, makes life a bit more difficult for him. Remember he's offering junk bonds, the corporate bonds, which we call junk bonds for this. We've had that talk about junk bonds versus long-term government securities, right? So we look at the TLT junk chart here. Let me see here. Here we go. Yeah. Remember this chart? Now look at this big, huge move out here. TLT just running up. So what this chart tells you is as this starts rising, this tells you that people are jumping out of the corporate bonds and getting into the long-term government securities because they're safer. They're guaranteed. So this becomes a risk-off environment. If price is moving up here, that means the market is going to risk off, which means your risky assets, Bitcoin included, are going to have trouble advancing and are likely going to find a pullback, which, you know, Bitcoin's been pulling back, right? Since the all-time high, right? When it's going down like this, it tells you that people are jumping into junk bonds, corporate bonds, and they're getting out of the safer long-term government securities. And so this is a risk-on environment. At this point, everybody puts money in, right? And so again, if you look at Bitcoin, for example, because I know y'all are mostly Bitcoin, right? But it pays to understand all the rest of this that's going on, guys. But look at this right here. Let me see if I can kind of just really kind of zoom in on this for you. Yeah, here we go. So this is what we mean here. Look at what's going on here. So overall, this is kind of sideways, which is why you see it looks like some up here. But this is the big move. This was the March lows right here of 2020. And notice this shot up, Bitcoin shot down. Bitcoin is a risky asset. Everybody going into TLT, right? They're scared. And then as this is gone, this is risk on. Everybody's buying Bitcoin, right? But look what happens here is we get to this area. And we start, so we get the volume kicking in here on this TLT versus junk bonds. As we get this up, we start getting this sideways here. That's when Bitcoin started going sideways. Look at this. And then as this breaks out and takes off, as it breaks out, look at that. That's this point right here. So it pays to understand how bonds play in here. And, I'm going to do this again. So, Travis is a great one to follow with all this sort of stuff, right? With all this kind of understanding of what's going on with the dollar and stuff like that. But one that a lot of people don't like because he doesn't say the things they want him to say. And because they think, oh my gosh, he's been saying this for the last year, so he doesn't know what he's talking about. I mean, I said it with that attitude. It's because those people that are saying that don't understand how long it takes for these things to happen. But Stephen Van Meter, Meter Stephen here, is a great one to look at to understand what's going on with bonds from a pretty unique perspective, which appears to be playing out much more. He does a lot of explanation on things that you don't understand about the primary dealers, repo, reverse repo. Right here, he's talking about the drawdown of the TGA here, and what's going on with that. He's got great videos where he kind of talks about things as well. But if you want a better understanding of what's going on with bonds and how they relate to the overall market and what may be happening, because as our friend earlier mentioned, we've got all this crazy high inflation and yet the dollar's running out through the roof. What's going on, right? It doesn't make sense. If you pay attention, a lot of what he's talking about here, it makes sense. It starts kicking in for you. And thankfully, he does that so I don't have to do a lot of explaining because I stay pretty busy with what we do at TWC. But of course, I'm always there to answer our members' questions and help them explain it even more if they're confused or just not like catching it right there for something. Now, here's the thing. This may or may not be the bottom here. It's a great place, a great support resistance flip here. We're breaking out of this potential wedge here. But if it drops down below this, we're looking down here to this S1 pivot. Right there around, this is the weekly S1 right around 1.29. And, in that case, this would just be a wave 4, and that would be a wave 5, and we hit this other high volume node. But I think that would be as low as it would go. So I can see us maybe potentially falling down and do that, which gives Bitcoin then definitely that move up. The ability to make that move up as this drops. Bitcoin makes that final move up. So don't think that Bitcoin's necessarily dead at the moment. There's nothing saying that it is. But you do need to, to pay attention to what's going on. We need to break through those levels I talked about, those more local levels, to kind of start increasing confidence in the idea that the bottom may be in. Don't listen to anybody that guarantees you the price is going to do A, B, or C, because they're idiots. What I mean by that, I don't mean it's so harsh. What I mean is either one, they're telling you because they think they can guarantee something, which means they're not real serious traders. Traders that do this for a long bit of time, we know that you're not going to guarantee that the market's going to do whatever it's going to do. We know that you can't guarantee what it's going to do. We've got good ideas maybe based upon all this information that we have, but there's never a guarantee, which is why we use good risk management. That's the great equalizer. Or they know they can't guarantee you, but they want to tell you what you want to hear, so you go spend money with them. Are we selling something? Sure we are. We're selling our education, what we do there. Have I ever just sat here and told you something just to tell you? No. Matter of fact, often I've told people things different, and I've been wrong. And people have, they got really upset when I said something different. But they weren't even really willing to listen. I'm going to tell you exactly what I'm thinking about the market at that time. And I'll give you the reasons why. And I'm not going to guarantee you anything, but I am going to continue to explain and extol the virtues of proper risk management and why that's so important to being a successful trader over time. And kind of railing against guarantees of price action. I like Bollinger Bands. Bollinger Bands are just, deviations of movement. And so, again, they're based on the idea that price kind of moves in a specific way. I keep telling you guys, the market is not random. The market is run by the bigger players who use unknowing retail as liquidity to make price movement. But it doesn't just move just to move. If a move surprises you, it's because you're not paying attention. More than likely than not, you're emotional about the other side of it. You think it's going to do the other thing. And that's why it surprises you when it does something else. But Bollinger Bands, they work on the same way. The idea that price moves only so far, except in certain circumstances in which there may be a reversal or a continuation in that direction, which is that breakout. Yeah, so I like Bollinger Bands a lot. Yeah. If you learn to use them properly, they can be a good tool for new traders. Obviously, I don't really use them a whole lot, but you all might remember, now that I think about it, remember when we were up here. Well, you know what? Let me look at the other chart here. Let me see here. This one. Remember on this one, was it this one? Yeah, look at the Bollinger Bands here. Remember I was talking about the high being up here, and I said the low target was going to be down here at this 30,000 because that was where that lower Bollinger Band was going to be. And again, I used that right there during the live stream to show you that, and that's exactly what's happened there with that. Finding support there on the weekly R1 pivot. So yeah. You can definitely use Bollinger Bands to help you out. But the thing is, you can't just throw them on there and do a quick read, a 10-minute read, and go, okay, I know what I'm doing, and expect to do it. You're going to know the basics about it, but you're not really going to understand until you spend hours with it, understanding how it reacts and how it moves and how price action goes with it. Most often when you get your breakouts, you'll have 3. So right here, you get that breakout here, 1, 2, 3, and then done, right? Going up here, and then you break out here, boom, 1, 2, well, actually this is a 1 and a pullback, and then it bounced, it found support on the moving average here in the middle of the bands, and then boom, there's your 1, there's your 2, there's your 3, coming down. But see, things like that, most people don't pay attention to. They don't notice. And it doesn't happen all the time. Right here on the weekly, you've got 1. It's really just a 1, but it's stayed outside of it. So it doesn't happen all the time, but often it's 3 on the moves with it. When it gets into when it's going to pop out in a trend. Yeah, so whether it's up or down, these just happen to be up. 1 goes back up here, and then you get a 1, 2 here. You might be able to argue that as a 3, but really it's probably a 2. Almost had the breakdown right here as well. So, it's just understanding general things like that help you out with all that. 1, 2, 3. Or you can see it maybe as a 1, 2, 3 here. So, again, it's like anything else. You have to read about it, understand and learn it, but then you have to really apply it consistently and get used to it. Most traders, unfortunately, they'll see something like this indicator or Elliott Wave or Wyckoff, and they'll say, oh, well, after 2 days of not really doing much of anything with it, they'll say, oh, well, it doesn't work, and then they'll go on to the next thing. Don't be those people, guys, all right? Because you're not giving it an honest shake. You're not really trying it here. All right? By the way, let me see here. Don't forget I had this point and figure here, which we had a 62.5 target. And we ended up hitting 63.5 here. So 1,000 above it on the point and figure chart here. But, again, we had these coming out. We had a 62,000 target off the bottom here. And we were right above that. Moving up here along the way, this gave us a 47,250. And then, of course, the 62.5. And then we had the breakdown here, just a little bit there. This was a strong, hard breakdown, though, which went further than my current count allowed for a good take on it. But we were looking at least from up here, from the breakdown up here at 57 or whatever, we were at least looking about $20,000 down there. And so, of course, it went, lower than that. It went down here to 33.5. But still within 4 coming off a 58,000 area here. So really not too bad on all that. So point and figure, still a thing I use, still works out really great. Those of you that were either on the free side or paid side of Discord, you'll remember that I used point and figure, and I gave you guys the chart there for this June 2019 high up here. You remember I posted that. It's still in there. If you guys are on the free side or wherever, you can go searching through it. You'll find that target. It was this area right here, which noted the top, based on this bottom here, and some movement up. So, again, you can use anything that you want to use, guys. You just have to take the time to really understand it, to really get to know it, to become comfortable with it. It's like bowling, right? You can learn, you can read or watch an instructional video how to bowl. But until you actually get there and hold the ball and go down the lane and throw the ball, and you do that over and over and over again, it's going to take a while, right? Until you actually do that, you've still got a lot to do, right? Yeah. No, TLT junk isn't a symbol. You have to type it in yourself. And you're welcome there, Michael. Sure. Yeah, so you just have to, looks like LXT got you there. But yeah, you have to do the TLT/junk on there. Let me see here. When you make channels, I got a question here. When you make channels, do you ever take outliers into account, especially if the outliers move out of channel and show resistance, then move back into the channel? Or are your channels more succinct? My channels, I've got 2 different types of channels. I've got pattern channels, which take the overall directional movement, which means swing highs to swing lows. And then I've got wave 2 channels or wave C channels or base channels, all based on Elliott Wave, in which case you expect price to move out of them a bit, usually. So like this right here. This is a base channel. Starts up here. At the start there, goes to wave A. Goes to wave B. This is a base channel in Elliott Wave. So more likely than not, you're going to get at least a little dip out of it. And so, but it'll come back in it. The resistance is still the important part. But yeah. So it just depends on what I'm trying to look at there. Am I looking at it via Elliott Wave or am I looking at it via a pattern? Because a channel is a pattern, guys. That's why we get the channel targets. So yeah. Hey, Marmoset, what's going on, man? Oh, and I saw you sent a DM to me. No worries, man. I will get to that. I've just been kind of really, behind this morning. But I'll get to that and figure out what you've got, what you asked there, and get it answered. Just want to let you know that I did see it. Let's see here. King Crypto, what's up, man? He says he's looking for a 35.7 target, 35,700, and seeing if we can get a hidden bull div to form June 21st on the 4-hour and then head up to at least 43K from there. Man, y'all in your times, man. I'm so, you know what? That's the one thing. And as a trader, I've tried to understand, tried to figure out how to time trades, and it never worked for me. So I don't do it. But some people seem to be all right with it, getting it done, and more power to them. More power to them. I'm just most interested. I'm at that stage in my life, with where I am, my position, everything, to just be okay with levels. I'm looking at price levels. I'm not worried about how long it does or does not take to get there. Yeah. So, but that's because, again, guys, I'm not trying to make, significant amounts of money overnight kind of thing. Though this week has been a great week with those USD CAD trades. But I don't set up to do that. I just look for good trading opportunities on there. Yeah. Let's see here. So let's go ahead and jump here real quick. Let's see. Let's take a look at the NASDAQ here. This is the NASDAQ composite, not the NASDAQ 100, just so you guys are aware. This is the only one showing any kind of decentness today off the beginning. So, again, it hasn't broken out above the swing high here yet, but, earlier this week I went ahead and changed it to this possible bullish count, right, which maybe gives us an ending diagonal here, okay? But we need to see a breakout above this swing high. If we just drop on down through this red line there, that'll be the first clue that the top may be in. And 5 may be actually over here. We just got a really deep retracement before dropping back down. Of course, it dropped through this swing low right here at $13,002 or so. We'll start adding some confidence to that. Dropping below this circle wave 4 down here at the low, that's your kicker. If you're dropping below that at $12,397.05, yeah, that should tell you that the top's in. But if we break out here, looking at potentially moving up here to around 14,500 maybe. As you can see here, we've got these tweezer top kind of things going on here. We had the big candle before the big 4-hour candle before the last candle of the day. And then the last candle of the day, tweezer tops, almost exact same height. And you had this hammer type candle. And then today, price gap down. And then it came down, bounced off this blue channel support here, the EQ here. And it's rallied back up. Not overly convincing with everything. You can see that we did have some bearish divergence here over the past 3 days or so. Leading to this, you had higher highs. You have higher lows here on your oscillator. So I wouldn't be, and this isn't very convincing at all. I wouldn't be surprised to see it maybe drop on down. But we'll have to see how it plays out here locally. If we compare that to our S&P E-minis, much different take here, right? So you've got what may be the high. The wave 5 may be done here. We've talked about this. It may be done. We're dropping through here. So actually, now that we've made this drop down below wave 4 here, if this count is correct, then this would signal that the top may very well likely be in, ending with an ending diagonal here. But we got a new all-time high off this that we didn't get with that NASDAQ composite. By the way, we got a new all-time high with the NASDAQ 100. So there's this disagreement. We have this non-confirmation with our indexes, right? With our indices. And as I've mentioned before, it doesn't guarantee that the top is in, but that's one of the clues you kind of look for. If you've got a good move up, and you're kind of thinking you may be getting to the end, and you're starting to see that your indexes aren't confirming new all-time highs, like one of them make a new time high and the other one won't confirm it, then that often happens at a reversal. So right now we've got a new all-time high here. We've got a new all-time high on the NASDAQ 100, but the NASDAQ composite that we just watched has not yet made an all-time high. It's right, our new all-time high. It's right there below it. But this dip down here below wave 4 maybe even looks like it's 1, 2, 3, 4, 5 here. So let me see here real quick, since it's dipped down since I did the update this morning. That's 1, 2. It's 2.0 down here, 2 times, so it's over the 1618, so that's a good 3. That's a 4. That's probably a 5. So the bottom may or may not be in. It may be pretty close to being in. But I would expect a bounce here that might take us around the 61.8 here, which is this 38.2 on the reversal. There we go. It might take us up here around this $4,220, $4,200, and yeah, maybe $4,220 or so. Break up there, and then you'll have a move down. So if we can get that in 3 waves up to that area, and then a follow-through breakdown there, that means we'll have a 1 here, a 2 up there, and it may just be the 50% here at 42.09. The 50% to 61.8 is where I'm looking. And basically that would just be a recheck of this ascending channel support as resistance. Gives us a 1, a 2, gives us a 3 at about 4,064, and a 5 at 4,028. Minimum, of course. So yeah, that's where I'm kind of looking at there. Let me see here. Jason, what's going on? He says stock indices today look very similar to Friday, February 21st, 20, also a monthly expiration. So in case you guys, if that's not ringing bells right away, that was right before that whole drop, that big, huge drop. So kind of crazy, right? Oh, King Crypto, you meant June 8th for earlier? Okay, no worries, no worries. Claudio, what's up? He says, man, I don't know why, but being here and listening to Chris, it gives me motivation to learn more and more, and not only about trading, but for having a better life generally. Man. Thank you for saying that. Seriously. For me, the most important thing of what you just said there was the very end of that. Because guys, at the end of the day, it's all about your quality of life. And as a trader, it should be about increasing your quality of life. Trading should give you more time and more money. That's what it should do. Because you can't get back more time. And if you don't have money, money is true freedom. You can't get back time that you've already lost, and money is true freedom, because no matter what kind of repressive government you may be under, or oppressive government you may be under, if you've got the money, you're going to do the things that you want to do, even if they say you can't. If you're under some government that says, you know what, you can't leave the country, I guarantee you, if you've got the money, you'll find somebody to help you. And so it's all about being better. It's all about reaching these levels that we can reach as human beings, man. You know, oftentimes, you hear me oftentimes talk about crypto Twitter and how much I really don't like it a whole lot, because it seems to bring out the worst in people. People want, they're not happy in their lives, so they're seeking attention. And they seek it in the worst ways possible. It's really, guys, it honestly is similar, if you've studied psychology, it's similar to the way that toddlers act and young children act. They burst out, they act out to try and get attention of some sort. And it makes me sad. It really does. I don't normally get really angry at people that act like that. I feel sad. Because to me, the most important things are life, in life, our family, and if somebody's in that position where they have to feel that way, that hurts my heart. So hopefully with what I do here, I convince you all that you don't need to do that, that you can be and do the things that you want to be and do. But it doesn't mean it's going to happen just because you want it to. You've got to work for it. And some people are going to have to work harder than other people. That's life. That's life. Government cannot make up for that stuff. You have to have that in you. You have to have that grit and determination to decide that you want to do better, that you want to be better in life. And then you have to have, again, the grit and determination to actually do it, because it's not easy at first. It becomes easier with time. Like anything else, the more you do it, the easier it becomes. And it's especially important if you're a trader, because how you look at life, I said this earlier, and how you view life and how you treat people in life it directly influences how you look at the charts. And so if you're on the negative side of that, acting negatively, it's going to be hard to understand a lot of the stuff that I say as far as the charts go, or that other people say, or understand the charts for what they are rather than for what you want them to be. So I do appreciate that you said that, man. I appreciate that. Thank you for really, seriously. That just so you guys know, that's really my underlying thing. That's my hidden objective, is to hopefully help you guys understand that, and understand that you've got what you need to be whatever you want to be. You just have to believe in yourself and be willing to put in the time, the effort to do it. And hard work isn't the only thing. You got to be smart. Not that I mean you have to be 180 IQ. What I'm saying is you've got to be smart about what you're doing. If where you want to get requires a certain bit of education, then you got to do it. If you don't have the money for it, then you'll hustle and you'll make that money. I firmly believe that we're going to, that if you really want to do a thing, you'll find a way to make it happen. I really do believe that. Again, this is coming from somebody who, who's done that same thing. I wasn't born with a lot of money or anything. I wasn't born with all that. I was born to working class parents. My dad was a career military, naval intelligence. And so, we didn't have a lot of extra. But I decided that I didn't want to do things the way they'd been done, the way that my parents had done them. So I had to work at it. And like I said, as far as trading goes, my first 4 years sucked. It sucked hard. This is real talk, guys. But I wasn't going to let that keep me from doing it. Instead, I used that as a reason why I should do better, why I should go out there and learn more and put in the time and effort required. So when I get somebody who, thankfully I don't really get this anymore, but I used to, first couple years I was doing this, I used to get people that would get upset. You're going to charge me to do this or that? Yeah. Because I had to pay my dues in time and money and effort to get where I'm at now, to get to this point that I understand the way I am. Why would you think that you are entitled to all that I did there for nothing? So anyway, guys. Sorry, a little heart-to-heart there. All right, so what do we have here? The Dow Jones, even worse than the other two. Now, you got to remember, your NASDAQ is going to be very tech-centric. So if the NASDAQ's doing well, it's because your tech stocks in general, especially your large ones, like Apple and Microsoft, which make up a lot of it, and Amazon and all that, are doing well, right? And then you get to the S&P, which was the second chart we looked at, and that's still got quite a bit of tech in it, but it's nowhere near like the NASDAQ is. A little bit better broad-based. And then you get the Dow Jones, which is very broad-based. And that's why you have this difference in the look of the indexes. All right? And so here we are, breaking down below wave 1 here. And this invalid, we had a secondary count. We had this as a possible 1, 2. Working on a 3. We also had the possibility that maybe this was an ABC. And then this was going to be a red. We had a red 1 here, and then we were looking for a 2 on a pullback. But the breakdown below the swing low, let me see, it's actually this one right here, wave B here, as we've got it here, it disqualified, invalidated the red count, because this would have been 1, this would have been 2, and 2 cannot pull back below where 1 starts. So this has added confidence to the idea that maybe we've got this possible count going on here. Now you can see that we gapped down on the breakdown there. Fell below it, almost hit the S5 pivot on the 1 hour. We're trying to find some room up here. We've got a bit of bullish, let me see here. Yeah, we've got some local bullish divergence right here. Higher lows and lower lows here. But the breakdown below wave B here really adds a lot of confidence to the idea that this is a 1-2, which would give us a minimum wave 3 of 32,348.85 cents. The only thing that would change this is if price were to head up above wave 2 now, because it did break down below this swing low. So it's going to have to get up above this wave 2 way up here at 34,849 and 32 cents to indicate that we're probably not looking at this count, that maybe there's some kind of bullish count. We'll have to go back in here and recount a bit. But, again, much stronger move down over time than we saw in the last two. Let me see here. Let me see. Gold. Gold real quick here. I want to try and get these done for you guys. I don't think we looked at gold every once in a while here. Been off a little bit lately. But man, look at that breakdown in gold there. And of course, this is relevant, in terms of what's going on with the Dow Jones here. The DXY here. This large move up, gold drops down. Everybody's getting out of gold, getting into dollars, right? My look right now is that we may have, this wave C completed here. Let me kind of zoom out a bit more here. 6 hour maybe going to help? Yeah, so potentially what I'm looking at here is a 1 and then a 2. So an A, B, and then here. Or maybe this could even be, now that I'm looking back and I haven't readjusted all this here, this might be a 1, 2, 3, 4, 5 as a leading diagonal. And then 1, 2, 3, 4, 5 here. But it's basically an ABC coming up here and looking for this move down. But what we need to confirm this is, let's see, if we look at this as a 1, 2, 3, 4. If we look at this as A and this is B right here, I think it's probably a better place than where we have it down here. That means we need to see a breakdown below 17.54 and 60 cents to kind of suggest that this is done as an ABC up and heading down. I'll have to come back in for Discord and update this count here, but I think we might be better up here as an A. So 1, 2, 3, 4, 5 as an A, B, and then C coming up here. But locally, as we look here, coming off the top, I've got this as a 1, 2, 3, 4, and potential 5. And this is a large 5 here. I'm not overly confident on the count at the moment here. We've got a 1, 2 here. So is this a 1, 2, 1, 2? Which would be 1, 2, 3, 4, 5. So that would be a 1, 2, 3, 4, 5, which gives us, a 1, 2, 3, 4, 5, which gives us a 1, 2, 3, 4, 5. So we're really going to need to see some stronger movement in the local area, whether it's down or up, to kind of define what's really going on here. I have a habit of diving in too deep and getting too complicated with my count, and then it messes me up. So right now I'm going to leave it to give me a little bit of show me what's going on there. But overall, the idea being that we're heading down. We broke down out of our channel here, out of our base channel. Usually when that happens, that signals that's a wave 3. We can note that the volume so far, here's wave 1, here's wave 3, if it's that right there. But anyway, it's increasing. Remember, wave 3 is often your largest volume, except in commodities where many times it can be a wave 5. You might have a largest wave as the wave 5. So that's still possible here as well. But the important thing to note is we've got expanding volume as we're getting down. We've got larger candle spreads. And so that's really kind of suggesting that we are heading down further overall. Jeff says the negative supply shock is cooling off. Lumber futures has already corrected 50% from the high. I expect the same with iron and copper futures. Once the DXY bottoms, it will probably get wild. And it's possible that the DXY has bottomed. Possible. I talked about it earlier. I'm looking back up there about 94.74 where I need to see it get above to kind of say, okay, yeah, it's probably bottomed. Right now it's working on a really good potential double bottom. An Adam and Eve double bottom there at that macro low at the beginning of the year. So we'll see what happens with that. If I get a minute here, I'll pull on the lumber futures here real quick as well. So yeah, looking overall further down for gold, silver, also dropping down here. Same idea. Drops through the channel here. Looks like we've got a 1, 2, 1, 2, which gives us a 3 of 3 here at about 25.235. Need to see it drop below this wave 4 here of wave A. It's already dropped below wave B, so that's good. Actually, you know what? Let me go ahead and put that there. It's the more important swing low there. So yeah, just a dip below that. If this count is correct, ABC up here, then this drop below confirms that's an ABC, and we're going to come down below this swing low, at least. Now I did talk to, I did show Discord that there is another possibility, and this is something I've been talking about for a while. The possibility that maybe we've got an A, B, C, D, and then this becomes an E as a triangle, in which case price then comes up here and targets this 34, 35 area. But overall, it keeps the whole idea the same, the idea that, you know, the top is here and we're heading back down. In that case, we would be looking to head back down toward, you know, that $10 level down there. I know. This is where everybody starts calling me names. You know, you don't have to understand it, guys. But when I get responses like, you know, name calling and whatnot because I say that and tell me how stupid I am, that really says so much more about you guys. And nothing positive about you at all. Please understand that. Try to understand that you can have a different thought with somebody without having to resort to name calling. It's ridiculous. I've got thick skin. It doesn't really bother me, but some of the people that you attack online might not. And you know what? Bullying is bullying, guys. Stop being a problem in the world. You've got a choice. In this world, you got a choice. You can either choose to be a positive impact in the world or a negative impact. And it takes a lot more effort to be a negative impact. But yet, the anonymity of Twitter, you know, and social media and online makes people think that it's okay to act that way. But again, you know, it always, if everybody ever acts that way towards you guys, just remember it says everything about them and absolutely nothing about you. Okay? And everything it says about them is negative. Again, this is that whole idea of living a better life. It's easy to get caught up in the nonsense and calling people names and making fun of people, you know, even if they're bigger people. You know, bigger being wealthier or whatever, or more prominent. You know, I'm thinking in terms of like, you know, Mark Cuban, who got rug pulled on Titan. You know, or Sailor, and, you know, his thing. It's easy to hate Sailor. Or, you know, if you're hoping he's right, it's easy to love him. But, you know, again, you got to remember, Sailor was... I saw this interview the other day where Sailor was saying something about, oh, I've been all about Bitcoin since 2016. But if I remember correctly, in 2016, he said that it was a joke. It was worthless, basically. It's only been very recently that he's been pro-Bitcoin. But, you know, it is what it is. People are going to say what they're going to say. They're going to do what they're going to do. Be above those people, guys, all right? So kind of, anyway, still looking for further downside here. If we break down below this swing low here, I've got as a wave 1, this purple line, at $23.74. If you break down below that, then this is not A, B, C, D, E. Now, that doesn't mean it can't be A, B, C, D, E, you know, larger triangle. Same thing we've kind of been working with Bitcoin, right? But if it drops down below wave B over here at $21.81, then it's definitely not a triangle. All right? So if you get down below this swing low, then it's not A, B, C, D, E, but it still could be A, B, C, D, E. You get down below this swing low, it's not a triangle anymore. All right? Let me see here. This is wave B of my current count, by the way. If it's a triangle, this would be, you know, A, B, C down as A. So, yeah. Let me see here. Oh, lumber futures. Yeah, let me pull those up. I haven't looked at them in a bit. I remember talking about them being at a top there when they were at that top, and probably coming back down. Let's see what we've got here. Yeah, absolutely awful candle. If you look at the 3-month, which closes this month, this is a huge red potential flag here. One candle does not a reversal make. You know, it's a pause at best. But if you get follow through down on the next 3-month candle, yeah, that's the top there. This is absolutely awful looking quarterly candle. You know, again, volume's expanding on it prior to what it had previously, and it's getting a lot more results. You know, it's not like this had this nice large demand candle spread that closed near the top of that 3-month period on that little bit of volume. We've still got another, not quite 2 weeks left, a week and a half maybe, just over a week and a half left. And we already have more volume than those previous 2 3-month periods. But look, not only is it not a demand spread candle. It's a supply spread candle with a huge, huge, huge upper wick. And it's closing lower and lower and lower. So I think, LBS may be getting like I often talk to you guys about, when you have a move and then there's a reversal at the top or at the bottom of the move, most often you're going to get a retracement back into it about 50% up, sometimes 61.8, but usually about 50% up. In this case, this becomes the quarterly demand structure or supply structure here. And I wouldn't be surprised to see price pop on back up here to around 1320 or so. But I would be looking for it, if it does that, to come on back down. It would just be like a 1-2 heading down, is what I would be looking at. If we look at the overall height of this, the 61.8 retracement is down here at about $287. So there is that. Yeah, Jeff, that's one crazy candle, isn't it, man? Oscar says lumber got log pulled. But yeah, really, really awful here. By the way, guys, I did have a tweet here, if you guys haven't seen it, where I was looking at that, and I was looking at a few ETFs, and kind of saying that the housing market may be topped out. Let me see here. Let me see if I can find it here real quick for you. Oh, yeah, I did it because I saw this Peter Brandt right here where he's looking at Whirlpool here, Head and Shoulders. And by the way, you go, well, what does Whirlpool have to do with new homes or with home sales? Well, because if everything's doing well and you're buying a new home, then you're probably buying new appliances. And that's the idea here. So when you've topped out and you're going the other way, that usually is because less than, like your housing is coming to a top. There's less buying of new appliances. So if you didn't ever know, that's why you would look at Whirlpool like that, guys. Let me see here. But he also had this other chart here of XHB, which is, your S&P Whole Builders ETF, which he's looking at this Head and Shoulders here. So, again, kind of following a long line, which makes a lot of sense with what we're seeing here with Whirlpool. Me personally, I am looking at, let me see if I can find it here. Here we go. So I was just looking at the quarterly, like we just looked at the lumber. So the quarterlies on these three, I think I was looking, we've got XHB, PKB, and ITB here. So here's the lumber one, which we just looked at. By the way, I printed this. Look at this. I posted this on the 14th of June, so that was what, 4 days ago? This is where the quarterly was. This is where it is now. Look at how much lower we're dropping still in the last 4 days. Let me get back over there. So yeah, I was looking at that quarterly there. I was looking at the quarterly here on ITB. Again, similar kind of structure here coming off. And by the way, notice the bearish kind of divergence going on here. And then this is PKB here. Again, same idea. Quarterly going on there. And on this one, look at the volume. Look how the volume's ramping up as you're going up. And this looks good until you get to this. So higher volume coming in and completely different change in the structure of what's going on here. Now we have to wait to see how the quarterly closes at the end of this month. But so far, looking interesting there. And again, printing lower highs while we're printing the higher highs here, giving you that bearish divergence off that as well. So, yeah, again, looking at those things doesn't look all that great, right? So we're breaking down here. We'll look and see if we can get it down here. Where are we at on the 4 hour on Bitcoin here? 4 hour, we've got this hidden bullish divergence printing. We're not quite bottomed out here yet in Stochastic RSI, so we got further for it to fall. As I was talking about earlier, technically you're going to look at the 78.6 level at 36,000. If it continues beyond there, look at your 85.4 here at 35,579. I think that's Hank's favorite crypto extension there, or Bitcoin extension, I think. But yeah, that would be your next one you'd watch here. Wave 2 can keep pulling back. It just can't get below, as I keep reiterating here, 34,680. As long as it reverses off that and continues up, you're good to go. If it drops below that, then this again becomes just an ABC, which brings the idea of this being an A, B, C triangle. You get a D, and then you get an E, and then it fall down. Makes it a lot more likely. So, don't freak out too much. We're right around the pivot here. Honestly, I don't think we can get 5 out of this. You would have to get something like a 1, 2 here. And then this would have to be a 1, 2, 3, 4, 5 instead of just, and that would have to complete then wave 3 rather than wave 3 of the next one. So you have to go like a 1, 2, 3. You can do a 4 as a triangle. The little bit here is a 5. I don't like that as a leading diagonal because it's too huge here and it shrinks up too quick here. So technically, maybe you could say it is, but I'm not interested in that as a leading diagonal. Nowhere near at this time right now. Yeah, I'm just not comfortable with that at all. So, another way you could maybe look at it is 1, 2, and then 1. So you get a 1, 2, 3, 4, 5. So 1, 2, 3. Let me see here. Oh, there we go. So 1, 2, 3, 4, 5. So now we've got a 1, 2, 3, 4, 5. Not really better. I mean, again, I can't say that it wouldn't be, but man, that would be a really, really poorly printed leading diagonal. I don't think I honestly, guys, I think if it's a leading diagonal, it's a 1, 2, a 3, a 4 here, and a 5 up. But right now, really, I still think it's a 1, 2, 1, 2. So, I mean, just kind of really look at it and be honest with you. This right here, this structure does not look like a leading diagonal here. So before you ask me if that could be, it doesn't look like it. Let's see here. Hey Jeff, you're welcome, man. You're welcome. Sure thing, buddy. It's all, again, guys, here, it's not all, it's not about, at the end of the day, what it is about here is just about helping you guys, just try to be as realistic about the market as possible, to try and get out of the emotion. You don't have to agree with me, but I just want to make sure that whatever your views are on whatever market you're in, that you're not being overly emotional. Because, again, I would think that if you think about it really, you would rather be profitable than right. And what that means is you want to know if you're wrong, right? So that way you don't continue to hold it and lose more, right? And you get in the right direction and you can make money, right? So I'm never going to sit here and blow, as I always say, blow smoke up your rear end or anything like that. I'm here to just tell you, to be realistic about the market. And you don't have to agree with me, and I'm not going to be right every time. But I will guarantee I've got some really good reasons why, why I feel the way I do. But I also have invalidation levels. I also know that if it does this other thing, then that means that what I'm looking at is incomplete, is incorrect. And again, that's the idea with I would rather be profitable than be right. So make sure you guys are paying attention to that. I get some flack every once in a while. I really don't get as much flack as I used to. But, every once in a while I'll still get flack. Oh, you were so wrong on this, this, and that. And I want to say, you want to grab somebody and shake them and say, were you not paying attention? I said, if it does this, if it goes through there, then it's invalidated. I literally told you what to watch for. But, again, guys, most people on here, that listen and watch these kind of things, most people don't want to learn. They just want somebody to tell them that they're correct. That's what they're looking for. They're looking for somebody that they think may know more than them to tell them that they're correct. If that person tells them they're wrong or potentially wrong, they're going to think, oh, well, they're just an idiot. But, it is what it is, right? Hey, XT, you have a great weekend too, man. Oh, my gosh, I'm running over here. So I'm going to have to get out of here. So guys, yeah, you know what? Hey, listen, we would absolutely love to have you with us, have you contributing there, have you learning from us. We've got such amazing groups of people there with what we do here at TWC. You know, our members, you know, and then I'm always there and Adam's there, bending over backwards trying to help you guys out. And so we'd love to have you there. You can get in. Remember, use the 50% off tier. Where is it? There it is. 50% off tier 2. As I wrote it in there. Just go up here to join us, and then click on tier 3 annual. You'll have choices if you want to do monthly, you know, biannually, stuff like that. Choose the annual, put that code in, and it'll get you about 67.5%, almost 70% off of the usual just month-to-month rate. So it's a really huge discount because, again, guys, you're not going to learn to trade overnight, and I'm willing to put my money where my mouth is and say, hey, listen, if you're willing to be serious about it and put the time into it, I'm going to give you the time for a really, really huge discount. And then it's up to you to do it, guys. It's up to you to do it, okay? So, yeah, I hope you guys have a great weekend. I hope you all trade safe. You know, if you're not following me, follow me on TX West Capital there on Twitter. Join, I put the link in there earlier for the Discord. Join us over there, or you can jump on my Twitter profile here. Don't jump on me. Jump on my Twitter profile here, and you just right here. You can click that. It'll take you to the free side of our Discord and whatnot. We've got a good vibes channel in there where our members, we don't ever tell them to do anything. If our members feel like, you know, saying something good, you know, about somebody in there or TWC in general or whatever, they'll put it in there. And so you can go check that out and not think that I, you know, forced somebody to do it or paid them to do it. You know, so when people get around to taking the time to do it, they do it. But anyway. Oh, Hank, I appreciate you, man. Yeah. They're moving over. I'm moving them down next week. So, you know, brother-in-law passed away. We got all the legal stuff figured out with all that and taken care of. And I went ahead and scheduled a mover for them and everything. And so they'll be packing up and heading down here to be near this side of the family now. So that's going to be pretty great. If you're in Discord, I might be able to convince her at some point to help us out a bit there. So you might get to talk to her there. But the whole idea of them getting down here is just to be around family and to kind of give them some time to, you know, her and my nephew, some time to kind of grieve and process, you know, losing husband, father, and doing all that, and then get them set up down here. So, yeah. Oh, she starts streaming. I tell you what, if she does, she's an amazing artist. She actually has a art degree. That's how much she loved art. I keep telling you guys, man, in life, figure out what you love doing and then figure out how to do it. Because if you love what you're doing, you'll never work a day in your life. And so she's actually started working on a children's book that she's illustrating and everything. And she kind of put that away when her husband went into the hospital. My brother-in-law went in the hospital earlier this year. But I am working on her, talking to her about finishing that up and getting it out there for sale because I just think it's absolutely amazing. So, yeah, if she does any kind of live streaming at any time ever, it'll probably be art related. Okay, guys. Hey, listen. I love you all. Thank you all so much for being a part of what we do here. If you don't join us, I'll be back next Tuesday anyway at 11 a.m. Central Standard Time, so hopefully you guys can show up. Be sure to like the video there on YouTube. Follow me on YouTube and or Twitch there if you're on, and that way you'll hear about it, all right? Have a great weekend, everybody. Y'all take care. And remember, the only thing you control the market is how much you lose. That's it. Take care.